All right. So we're live. Hello, everyone, and of course, welcome to the AMA with Stabull. Now, before we dive into specifics, features, and of course, everything that the team is all about with the presentation part of today's AMA, we're just going to start it off with my short introduction, which, again, as per usual, will serve to give all of you listeners tuning in the hang of the basics. So, for those of you that didn't have a chance to check Stabull out yet, it is an innovative AMM which is designed to serve as a central liquidity source for stablecoins and RWAs across multiple chains. Now, as we're getting into things, we're just going to continue with the current deployed pools. So I did want to mention this is, again, especially for those of you that didn't have a chance to go through their Gitbook, white paper, website, everything is as clear as possible there. And even as I did mention, for all of you visual learners, you have everything ready to go with the images as well. So again, I do strongly encourage you to do so, to have the website open as Fran is giving his presentation and everything that you need to know here. But I did want to say with the current deployed pools that you already have quite a lot of options if you're interested. You have Euro stablecoins, you have the British pound stablecoins, you even have the Japanese yen stablecoins. So did want to mention that this is not all of the options that are available, just a few of those that I remembered and I did want to add in the intro. But again, for clarity purposes, we're gonna go for absolutely all of the options, everything that you can expect as we're diving deeper into today's AMA. And also, as we're currently discussing about deployed pools, I did want to just tie this together to the integrated chain. So the first two being Ethereum and Polygon. But in the future, for anyone interested, there's plans to integrate more. So again, definitely something we're going to get into later on. So to keep it short and simple, because we all know how I usually tend to get with my introductions, did want to just mention a few things that I personally found interesting. And again, just the basics for those, not going to go into specifics here. But you also have Stabull's liquidity mining program. So this is in place to incentivize you to provide liquidity to the Stabull protocol. You will get all information on associated fees with swapping here. And I did want to just drop a little bit of a spoiler alert here, even though that I'm not going to be touching upon concrete numbers just now, because, you know, we have Fran here, the expert. I did want to mention that it is extremely low. So something I personally love to see, and I'm sure that anyone interested to use the protocol will be more than happy with as well. Now, obviously speaking, as we're talking about Stabull here, we're also going to dive into security measures here, just so you can rest assured that everything is safe, everything is in order, and something that I personally love to see as well. So talking about how easy it is to use, as well as the clean looking user interface, because this is definitely something that goes to show everything that Stabull is doing, that they care about you guys, you know, the community, their users, and they want to provide you with the best possible experience, and of course something that is very simple to use. So obviously an emphasis on this. Now, before handing over the microphone to Fran, I did want to just drop the pre-sale reminder. So it is already live, started today at 3 p.m. UTC. So if you're interested in contributing, you can find the link to it on the AMA announcement. Currently, the last pinned message, it is forwarded in our main chat as well, so you don't have to do any scrolling. Everything's hassle-free as per usual. And some encouragement if there's going to be anything that might be left unanswered, even though that we usually try to keep it community focused. Then want to just encourage absolutely everyone here to join your Discord, ask away anything that you want to have, even if you're just coming there to say hi, maybe striking a conversation, you can do so without a problem. So yeah, without further ado, Fran, it is a pleasure to have you here. For starters, if you don't mind providing a little bit of background information about yourself, as well as the rest of the team. And once we're done with that, we're basically going to get into the presentation part that I was talking about. So all the features, everything that you want the listeners to know. So for now, handing over the microphone to you. It is a pleasure, and the floor is all yours. Welcome.
Thank you. Great to be here. Well, I guess I'll start off with a little bit of background. I've been in this industry for over 10 years. I've seen the rise and fall of various different decentralization attempts and the various different chains, the consortiums that have arisen. You know, back in the day, there was just Bitcoin, and I partook in the first ICO, which was the OmniDex on Bitcoin, and the first attempt to create decentralized derivatives. Obviously, that was interesting, but 10-minute block times, we needed to wait for smart contract programming languages like Solidity to come about. I guess fast forward, I've raised over $600 million between 35 customers as one of the first, I guess, investment bankers in this space. I've put together the tokenomics for companies like Chainlink and raised Sergey has $33 million, as well as Salt Lending and Bancor and a bunch of others. So we've been in the advisory space looking at, valuation models, go-to-market models, technical designs for the various different borrowing, lending, derivatives, etc. on-chain. And to us, it's very clear that infrastructure is important and that the trend is, the real world is going to come on-chain. And so I took the best of what we learned over the last 10 years and 2 years ago, just to give you a bit of a genesis of how Stabull came about. 2 years ago, there was a bunch of stablecoin issuers that were, the British pound team, the European team, the New Zealand dollar team, the Australian team, the Japanese team, and they were all getting started with non-USD stablecoins, but they didn't have a piece of infrastructure because Uniswap and Curve and all of these AMMs, they're not designed for foreign currencies and commodities, right? So I ran a series of workshops and said, hey, what do we need as an industry? And out of that came some really good suggestions, like, why don't we make security number one? Why don't we have, 5% of the protocol revenues go towards an insurance pool? Just lots of good common sense stuff. So then we reinvented the math behind the automated market maker, and we created a fourth generation AMM that's more capital efficient for stablecoins and real world assets. Now, at the same time, we were doing some research to identify what is the biggest trends moving forward. Again, this is 2 years ago. And we identified that real-world assets, the world going on-chain, basically, was about 2 years away. And now we've seen hundreds of millions of dollars invested into real-world assets, non-USD stablecoins, and all the neobanks and other things in between. And so we have effectively built ahead of the big wave that is started now, a piece of infrastructure that is super simple and super important for the sector. Right? Stabull is designed to just be a place where you can swap one asset to another. Right now, it's, say Brazilian real to US dollars or various different stable coins. Soon it'll be oil, gold, silver, a variety of different commodities. And you can then have an interest rate or an APY. So Stabull, you either swap one asset to another or you earn an interest rate by adding liquidity. So it's very, very simple, but scalable to the billions and billions of dollars per day, per week, per whatever. And happy to sort of dive into any area you want me to sort of dive into there.
Awesome. Perfect. Fran, just wanted to say appreciate the introduction here and, of course, doing a rundown into everything that you guys are all about. Now, before we get to the topics of discussion today, I just want to ask if Pepe Elon also has anything to add, if he wanted to say hi here. If not, we're just going to keep it moving, just so I know.
Pepe Elon?
Okay, we're going to assume that he is just here to support. But yeah, to keep it moving here, again, much appreciated. Thank you very much for the information here. And I did just want to ask you something that kind of occurred that I wanted to ask you, because this is more so, I wanted to start it off with the basics before we get to dissecting separate features, everything that you guys have available here. Did want to just ask you, because the name itself, and I'm sure that this is something that you guys are proud of as well, but as we're talking about, stable coins and you guys actually having the name Stabull, who do I give the props for the name? Because I didn't even know before we dive into the game, doing my research, I figured, I'm going to be completely honest, I figured that it's not pronounced Stabull, but I was like, oh, it makes perfect sense. So who do I give the props to?
Yeah, when you create a new brand, it's never easy. You ideate and come up with a list of names, and then, it doesn't feel right. And then at 3 a.m. on a Tuesday, it just pops into your head. What do we call it? Stabull, as in, S-T-A bull. It's a play on words. And, we love the name. You can have a lot of fun with it that way.
Yeah, for sure. And this is exactly why I decided to ask you here. So yeah, perfect. Much appreciated here. And to keep everything moving with the features and whatnot, I did want to I assume it makes the most sense for all the listeners here to make it, as simple as possible, because this is something that both of us established today, that what you guys are doing is just simplifying the entire experience. So I figured we just start off with basics for anyone tuning in to have all the relevant information. So first and foremost, I guess we just focus on stable pools, right? Makes the most sense. We're going to then dive into blockchain, swapping of assets, maybe fees, just so we do a complete rundown before we actually keep it moving with the community questions here. So yeah, first and foremost, if we start talking about stable pools currently. So not going to go into supported blockchains, supported stable coins just yet, just so we keep it moving with the basics, and then we get to dissect everything. But yeah, with the pools, one thing, and this is, again, just for clarity purposes, so everyone has all the useful information today, you obviously have two separate options that you can perform if you're a user, if you want to take part in Stabul's protocol here. So you can do as let's say a liquidity provider, depositing and withdrawing liquidity from pools, and then you obviously have the second one, which would be if you're a trader, swapping between the two tokens. So again, for clarity purposes, once you're performing the two functions that we're just kind of discussing through, wanted to ask how those two operations, how they affect token reserves, for anyone that would like to have, again, a complete rundown on how this even works.
Okay, you want a technical explanation of how the swap and the bonding curve works? Is that correct?
That would be great. That would be great. Correct.
Well, let's hand it over to Ryan Greaves. If you can unmute him, he's the head of product, and he'll be able to concisely go into detail there.
Absolutely not an issue. Ryan, welcome. You're unmuted. Hopefully you're having an awesome day so far as well. And yeah, floor is all yours.
Thanks. Yeah, thanks for having us. So I guess the easiest way to describe this is like the difference from Uniswap or any other generalized AMM. Most AMMs, and the pools that sit on them kind of fit into three categories. You've got your crypto pools, which are swapping any kind of high volatility crypto, Bitcoin, ETH, and anything else. And then your stable swap pools, which are pairs that are pegged to each other, like DAI to USDT or any one-to-one pool pairing. And then in between those, in terms of volatility, is kind of non-USD stablecoins and RWAs pegged to USD. They don't have as high volatility as cryptos, but they do have some volatility compared to one-to-one pegged pools. So that, like, I guess the innovative part of Stabull is that liquidity is dynamically recentered based on off-chain oracles. And this is very important for, in particular, stablecoins and RWAs, where the majority of price discovery actually occurs off-chain, whether that's the multi-trillion-dollar FX markets or the commodity markets. A lot of the movements in these like stablecoins and RWAs, the price movements, are occurring off-chain and then have to be replicated on-chain. And quite often that results in a lot of arbitrage profit being leaked to arbitrageurs and away from liquidity providers. So what the Stabull protocol does is it will dynamically recenter the liquidity around the off-chain oracle in the hope of not leaking as much profit and pricing being more up to date and there being less slippage compared to other AMMs with the same assets.
Perfect. Ryan, thank you very much. Much appreciated. I hope that I didn't cut you off, because it kind of sounded to me like you wanted to add something. I do appreciate the answer. So, but yeah, I assume that this is all good to go here. So Ryan, thank you very much for the in-depth explanation here. And for us to keep it moving, so a fairly simple one. This is me focusing on specifically the first two blockchains, right? So something that we did mention in the intro as well. So obviously talking about Ethereum and Polygon. So this is something that I wanted to dissect into, let's say, two separate parts. And to not overly complicate this, I'm just kind of curious with the, let's say, the thinking process that you guys had in mind as you were, developing developing the product, all the features that you have here. Just wanted to ask, again, we're going to go into the second part, maybe I even dissect it into 3 parts. I'm going to see how we're going to be approaching this. But yeah, to keep it short and simple here, just with the first 2 integrations, again, being Ethereum and Polygon, wanted to ask you how come you've decided to go with those 2 first? Is this something that you tied together to just, let's say, daily volume or anything else? Maybe you just being a fan of the blockchains.
No, let's just look at it pragmatically, right? Where are currently all of the stable coins? They're on Ethereum, followed by Polygon. Every single layer 1, layer 2, and roll-up right now has stablecoins and RWAs right at the top of their roadmap and strategy to increase use of their chain. So we are talking to 13 different chains. You name them, we're talking to them. Ton, Ripple, Stellar, etc. All of them are prioritizing stablecoins and RWAs, but they don't have hundreds of millions or billions of dollars of stablecoins on their chains yet. So it makes perfect sense, right, that we just simply integrate the chains where the stablecoins exist first.
Honestly, it does, and it's something that honestly speaking, I didn't even bear in mind. Where I was kind of, saying, okay, I definitely want to see how come you've decided to go with that. But yeah, makes perfect sense here. So, Fran, much appreciated. And a little bit of an add-on to this, as I did mention before. So this is something that I guess I could tie together to fees, right? But we're not going to be talking about fees just yet. But purely just for the sake of, because I know that this is, I think, for protocol fees. That is something that once the governance model is going to be in place, that anyone that is a part of the governance will have a right, and not only voting but also ultimately making the proposals to for specifically the fees. Even though we're not going to be focusing on those just yet, you can have a say in, let's say, how it's going to be divided, the amount, basically everything of that nature. So brings me to the question with maybe later integrations with blockchains, if this is something that you guys are ultimately planning to take the wheel, or once the governance model is going to be in place, if this is also something that anyone, a part of it, will also get a chance to maybe vote on it, maybe make proposals if they see, okay, this chain is good. Maybe the options for stable coins aren't really there, but still wanted to see if this is something you'd also be willing to listen to feedback for anyone part of the governance.
Yeah, of course. Well, again, let's take a pragmatic look, right? So everybody wants stable coins and RWAs on their chain. Currently, the stable coins and RWAs are on Ethereum and Polygon. There's a little bit on Stellar, there's a little bit on Ripple, there's a little bit on Ton, Hashgraph, so on and so forth. And we will integrate any chain and add any pool as long as people come to us and say, hey, we will, commit to a minimum amount of liquidity, a couple of $100,000 on each side of the pool. If you can add, a pool for, I don't know, the Nigerian currency versus USD or tokenized gold. And if it's on a different chain, well, most of the time there's a grant that covers the cost of integration. And so we're just simply following the market. The market is going to dictate, what is popular and where the liquidity is. We're just infrastructure that will load pools for anybody that is legitimate that wants a pool. When it comes to governance, we envisage that there's 3 different things people will be able to vote on. One, we want to create healthy competition so that people vote with their stable tokens in terms of which pool gets how much interest rates. And so that gives a very strong reason for people to accumulate voting power, in the form of a governance token. Secondly, the protocol generates fees. Every time you swap, a fee is generated. We have to start, decide the first composition. So we've decided, 95% of all protocol fees will buy stable off the market, and then 30% goes, into the long-term liquidity mining program, 5% goes to insurance, so on and so forth. And on a quarterly basis, people will be able to vote and say, hey, I think we need to have 10% go towards insurance, or whatever the case might be. And then thirdly, if there's, we're going to have in sort of H1 next year as part of the DAO and the on-chain voting, so people can write proposals and say, hey, we would like we would like some kind of reward for bringing you $10 million of liquidity for, I don't know, tokenized golds or silver for even wrapped Bitcoin, as a pair. And then the community can vote, like, is this a good risk reward? Do we want the liquidity? Does the community want this pool? And are we happy with the incentive that they're asking for to be given to them out of treasury? So you have to put the framework in place for good governance. And I think, again, taking the experience we have working on 30-something plus different, large DeFi projects over the last 10 years for the industry, we've distilled our experience, and we created a decentralization roadmap and a governance framework roadmap that I think is going to work really nicely and create an equilibrium between, people getting interest rates versus accumulating the token for voting power.
Perfect. Yeah, it definitely makes sense and definitely shows that you guys have a lot of years of experience. And this is, again, just an additional one that I was kind of thinking to do an add-on for. As I kind of think that I understand this correctly, just judging by the last thing that you said here, but figure I'd just clarify in order to have all the relevant information here. So first and foremost, I would assume, just judging by the answer that you gave me here, that the requirement's going to be, let's say, specific amount of tokens for you to even get voting power. And brings me to the question, with the last thing that you said, if people are going to be, incentivized to hold more, I assume that if you hold more tokens, you're going to get more voting power, or maybe even having a minimum threshold for you to even make your own proposals if you, again, hold this and that amount of tokens. But again, for clarity purposes, if I do understand correctly, let's say if I hold more tokens, I'm going to get more voting power, or is it the same for absolutely everyone, regardless of your holdings?
No, I think this has to be a meritocratic model. Basically, if you have tokens, you can vote on anything that there is a vote on. It's not like electing a representative and then they collude and make decisions together on behalf of the masses. I think it'll just be one token, one vote for anything that people want to participate in. But the incentives are really for, issuers or large market makers, market neutral funds, family offices, corporate treasury. Like, think of it this way. Say you have a market neutral fund and you're just trying to extract 4 or 5% a year as a money market on this fund, and you have $100 million liquidity on a stable pool. If you were to then take 1% of that, $1 million, and buy stable tokens, that buys you $1 million worth of voting power, right? And if you then successfully vote that your pool can increase the interest rates by even 2% for the next 90 days, like every quarter, well, then you make your $1 million back, because the amount of interest rate increase is beyond the cost of buying the votes. So this is what I mean. It creates healthy competition between various market participants. And we also have a deflationary mechanic, right? So 5% of all the different swap fees will buy the stable token and not burn them, but convert them to a non-sellable version we call the protocol-owned liquidity token. And if you hold the protocol-owned liquidity token, well, then you get a share of all the fees. It's like a stake-only pool. We have this described in our Git book. Sounds complicated, but it's relatively, straightforward, right? Stabull effectively offers the ability to swap one asset to another with high degree of efficiency. We just did a test between a competitor and USDC moving to euros, and we ended up 1.5% better off, which is like a massive difference, really, in terms of more capital efficiency. Or you can dust off your stablecoins and add them to earn liquidity. And then you participate in governance and say, I want more towards insurance, or I'm going to vote towards this proposal to load tokenized gold versus Singapore dollars, or I'm going to vote to, change what the interest rates are to benefit me in the pool I am staking in.
Perfect. Friend, much appreciated. Thank you very much for the full rundown on this. And I especially just wanted to give you props for this, because even if something does sound complicated, I think that you're doing an absolutely phenomenal job of just, explaining something that might sound complicated to, just doing a full rundown to sound a little bit more basic so everyone can understand. And again, why I wanted to say this, even a little bit of my feedback here, is it goes to show, I know that I said this probably 2 times or maybe even 3 times today, but it shows that you guys have experience. It shows that you are building something, that you're offering features for people that you just want to simplify, So again, props to you and the rest of the team, Fran. Thank you very much. And lastly, just from my end to keep it short and simple, and of course, just wanted to dive into some community questions today as well, because again, as I did promise, we're going to keep it community focused. And usually I have a little bit of a problem to not overly talk today, but again, just the last one here, it's going to be a fairly simple one, something that I did make notes. Usually I don't do, so just trying to go with everything I remembered, but today specifically for the bug bounty program, right? Because this is something that I personally would say also enhances security measures. It goes to show that you guys are serious. You would like to encourage absolutely everyone to take part into it. If if there's something that might be potentially an issue, maybe a risk, they can just provide a feedback. So again, hence the bug bounty being in place. So brings me to the question, if there's let's say a cybersecurity company, maybe just community, maybe even an individual that is interested, in taking part. If this is something that is already live currently, because I know that you guys have some of the features, I know that you're currently in the process of, updating it, maybe new features, but I know you're live. So is this already up and running? How can you take part? Just some basic information, let's say, on it.
Yeah, thank you. And look, security is paramount. We are trying to create basically an autonomous, super simple swap facility with absolute finality and clearing and settlement for billions of dollars in FX and commodities. That's our goal. We want to be a top 10 DeFi project. So if we get this right, then I think we've got the recipe and all the things in place to, grow level by level moving forward and for them dozens of partnerships, then we're going to end up with hundreds, if not billions of dollars in liquidity. And so this becomes a giant honeypot, and hackers are going to attempt to, do what they do. And so we built this from ground up using trusted developers that we've worked with on various projects for 8 years. And we've several audits on our pools, on our token, and we'll continue to do that every time there's a material integration. So say we integrate Ripple, a hash graph, every couple of months we're going to make an announcement. A new chain is live, more pools are live, new partnerships that come with those are live, and an audit for each of those material updates has to be in place. But beyond just simply auditing, we want to do security, alert notification, penetration testing, and we've sought out to partner with the best of the best, and we picked Hactra, which is, I think they got a $200 million investment from Binance and Bybit and all the big exchanges that they do security and cyber security event management for. And they have a novel patented AI system that they're rolling out now for real-time notifications of security risks and everything else. So we're starting with a $50,000 bug bounty program. You've got your critical, medium, and low priority bounties. This is being designed at the moment. It should be live shortly, matter of days, not weeks. We'll have a nice landing page on the Hectra. We already have what's called an OSNet profile there. And people will be able to submit, ethical disclosure of security vulnerabilities, whatever they might find, and then they'll be appropriately rewarded from that $50,000, prize pool or bounty pool once that is live. There's all sorts of, bounties that will be out there, and the industry's interesting, right? Like, we will probably have people that are like fake ethical hackers pretending that they found the vulnerability, but they haven't, as a scam. Like, that happens all the time too. And so we wanted to have a professional partner for the bug bounty program that can manage and assess, genuine claims and bug bounty program. This is also going to reach a lot of developers too, as Hectra is, a very large and well-respected company with a lot of cybersecurity experts and community. I think they're actually publishing an article about us in about an hour or two through their various distribution channels. So hopefully that answers your question on bug bounties and all the rest.
Almost definitely. Wanted to say before you even ask this, wanted to say that not only answers my question, but you provided even more feedback. So greatly appreciated. So thank you very much for the debate here, for all the relevant information. Fran, truly enjoyed it. And without further ado, as I did promise a little bit earlier, we're going to move on to some community questions now. So you know how this goes. Saint, you're going to be the first participant. Therefore, you are on the hot seat. Better make your questions count. Better make them great ones. And of course, hoping you're having an awesome day so far. Floor is all yours. Welcome.
Hey, Rainlands, how are you doing? It's great to hear from you. Your voice is always cheering us up in crypto. That is doom. Anyways,
absolutely fantastic. So thank you for asking, man. Keep it moving with the questions.
No, I'm just curious. This is a very obvious utility that was overlooked, and getting it first breaching the different currencies market, and then you are trying to go into commodities and FX. Now, I like the idea and how confidently you talk about bounties and having prize money and. You are spending a lot of cash, but where is your cash coming from? If you start the protocol.
Yeah, I'm happy to answer that. So this is really a question about the cap table. We spent a lot of time making sure that we don't subscribe predatory venture capitalists. We do not have any investors that are your typical kind of, dump everything as soon as it's unlocked. Our lead investor is a publicly listed company on the Toronto Stock Exchange. They're one of the biggest data center Bitcoin miners on the planet. They're called 66 Capital Inc. And then we have some great support from the likes of Algo DAO, who are incredibly well connected and knowledgeable in the decentralized governance sphere. And then we have Titan Block Capital, who've done a lot of good deals and also see that we could offer an alternative to the SWIFT network for clearing and settlement of FX on chain, as well as Take Me Capital, which is our own firm. We put our own money into incubating this, and a few kind of high net worth individuals that are deep in the real world asset space. So we've only got about 25% left of the pre-sale. We're just trying to close it, which is why we're live with the. We wanted to decentralize the pre-sale a little bit by making it available, the last bit, on GemPads. So if you participate in GemPad, you're going to be investing along some very big names and some very loyal and active investors that are making introductions, every day to token issuers and real world asset providers. So hopefully that answers your question. Raylan, back to you.
Okay. No, I had a follow-up question, of course. So you said that you already have the real world commodity providers. You are mentioning a $1 trillion market. Of course, you might have eyed more than this. So how are you planning to onboard more liquidity providers in the future?
Sure, that's a great question.
Should it be, would it be again through investors, VCs? What are you planning to do?
Yeah, so we always knew we would have a hurdle to get over, which is called the 0 to 1 problem, right? It's always more difficult for a new decentralized exchange or even centralized exchange to get your initial liquidity. It's much easier to go from 1 to 2, 2 to 3 than it is to go from 0 to 1. So what we've done is we've put together a 10-year liquidity mining program. Anybody can participate in that. That will really come to life after the TGE when the token is flowing and the APY is claimable through the interface. Outside of that, we've done effectively 2 years of hardcore business development. We've talked to every single stablecoin and real-world asset issuer. We probably have some of the best intelligence and visibility of who is doing what, where their tokens are, which chain they're on, who are they partnering with, when are they moving to what other chain as an issuer perspective. And so we have letters of intents that we're signing with various different issuers and providers that effectively bring liquidity to the platform. It's hard for us to announce preemptively, but I expect to have tokenized gold and silver before Christmas, maybe even oil and some other commodities. We should have maybe one more chain before Christmas. We should have maybe half a dozen or a dozen more pools by Christmas. And these are, so we have a liquidity mining incentive program that anyone can contribute to. Then we have, again, deep business development. Our business development staff are like Cantor Fitzgerald and large corporations in the broker-dealer space. Then we have a massive $200,000 campaign starting on the 1st of October with Magic Square. The last time they ran a campaign to attract TVL and liquidity into pools, they took a project from zero to $37 million of TVL during the campaign period. We have talked to over 175 different providers in the crypto space, and we've picked Magic Square, DE.fi, and the best of the best providers for the campaigns to attract and reward people. So there will be a campaign that starts that's, click on the app, make a swap, add liquidity, and then you earn a reward for an airdrop later on. So I think we've got everything in place. It'll take a little bit of time. It'll be step by step. But as I said, you'll probably hear an announcement every month. Stabull partners with, some chain to unlock the $1 trillion FX market together. And it'll just be every month a new pool, a new chain, a new partnership, new liquidity providers, and then of course the organic growth in the social media and user acquisition campaigns running in parallel constantly.
Okay. Yeah, that was a satisfactory answer. And last question from like the community here, and your community too, like when chat, because on Discord too and here in Telegram too, you just have the announcements, so somewhere where community can engage.
Yeah, we're active on Telegram, Discord. I think Discord is where the more vibrant dialogue happens. We've just started to grow that. Of course, X for general announcements and information and research and thought leadership content that we produce. I would encourage people if they want to get active and, especially for later on when the governance portal is live. I think the action is going to happen in Discord. Telegram's always handy for sharing videos and latest announcements, just like Twitter. So go to our website and check out the various different social links. Some people prefer Telegram, some people prefer X. We have the main ones covered. We also do LinkedIn and YouTube, obviously, to try and cover everything.
Yeah, most of our community discussion at the moment is on Discord, our Discord server, which you can find on our website. As you said, we do have a Telegram announcements channel, and we have been talking about maybe opening that up as a group to cater for the more Telegram native people. So if you think that's a good idea, then we can get that going.
Okay, that was all for me, Rainlands. Thank you, Fran. Thank you, Ryan.
Yeah,
Thank
great
you,
question.
Thank you very much, Santi, for your questions. And we're going to keep in moving to OG Benita. Hopefully you're having an awesome day so far as well. And the floor is all yours. Welcome.
Thank you so much, Raymond. I did follow it up, and I really say I like the presentation. It was a total breakdown of, how the project would run. And I just want to ask a question regarding the actual token, the Stabull token. I understand the governance part of it, like where you could, hold a token and be part of the governance of, if there's a vote, you could vote. But I want to see, how this Stabull itself would be utilized in the entirety of the project itself. Like, is there any other, benefits that comes from holding? Are there times where you could, do some stuff around the Stabull token itself aside from the governance?
Now, we've worked on, again, 30-something different projects, and trying to stuff too much complexity into the design can have a lot of friction and lose users in community. So instead, what we realized is that, we call them financial automata. Like these systems of smart contracts, once they're set up, if they're designed correctly, they can just run and run and run, irrespective of how many people use it on a daily basis. It could be 10 people one day, a million people the next day. And so what we've done is designs deflation as critical, where we automatically buy our own token off the market and then lock it up or convert to a non-sellable version. So that's the economic benefit of holding the token if you're not purely interested in voting. In the future, we might have discounted trading fees. If you have certain amount of tokens staked, for example, that will likely be after the governance portal, which is priority, goes live probably end of Q1 or thereabouts next year. But what we're trying to do is avoid like the classic traps that a lot of these projects have, where they feel like they need to just keep adding bells and whistles, like lottery and NFTs and other stuff for the sake of looking busy. We have inherently a really strong product market fit and path to market. And so what's critical is that we create competition between different market participants so they can have a very strong incentive to accumulate the token to vote for interest rates or adding new pools or, major governance considerations, while at the same time, programmatically, without having any complexity, we have, deflation and constant buy pressure to our own token through the system. Think of it this way, the more liquidity in the pools, the more larger swaps can occur. The larger swaps that occur, the more fees are generated. The more fees are generated, the more we're automatically buying, Stabull off the market and putting it into long-term liquidity incentives. The more liquidity incentives, the more APY. So the system is designed to balance itself. Because if the interest rates start getting to like 15, 20%, well, then more people jump in and add more liquidity because it's really attractive. But when they jump in, then it goes back down, the interest rates, because it's spread across all the market participants. So we thought deeply about all the game theory and, the tokenomics and the utility. And we think we've got a really fantastic design here that satisfies all the different types of users.
Thank you, Raymond.
Thank you for the question. Yeah, sorry for cutting you off, Fran. Okay, we're going to keep it moving to a few more questions. So, Cece, you're going to be next up. Hopefully you're having an awesome day so far as well. And the floor is all yours. Welcome.
Thank you very much, Rainlands. Really great AMA so far, actually. And it's been a while. I've heard your voice, Rainlands. Well, I hope you're good too.
Absolutely. Thanks.
Great. All right. So I wanted to talk about the stable coins, the actual currency that form the base for USDC. Now there is the Japanese yen, the New Zealand dollar, and the rest. Now some of these FX FX pools are already in the market. I wanted to know how you're going to be able to have access to some of these pools, especially the US dollar. Sometimes it changes, especially when sometimes the currency increases and depreciates and stuff like that. How are you going to get access to these pools directly from the FX market and then integrate that pool into your own DApp or into your own liquidity pool in a way that you can be able to control swap fees, control some transactions that are happening, especially when there is a change in the currency price?
Probably best for Ryan to answer that one. I mean, just shortly from me, the SWIFT network and the legacy interdealer brokers and FX brokerage businesses are totally unconnected to the DeFi space, on-chain space, right? So issuers like Center Circle or Paxos or whoever, they're the ones that have what's called a bearer trust, where you wire them through the banking system some money, and then they turn it into tokens, and then you take the tokens, and then you're in DeFi. And so from a technical perspective, we use off-chain oracles, but Ryan, do you want to perhaps just offer a paragraph or two?
Sure. Yeah, I think your question's about how do our pools like affect change from off-chain like FX markets, I believe. But yeah, basically carrying on from what I said before, when there is a large currency change and then FX market off-chain, the oracles that are pulling data from those markets will update and send out an updated price, and that affects our pools by shifting liquidity around that price. So that's kind of the central difference between Stabull protocol and other like generalized AMMs, which don't have an oracle injected. Those pools, if it was NZDS USDC, if there's a change off chain, nothing changes automatically in the generalized AMM pool. On Stabull, the liquidity is changed, and suddenly there's an incentive to move the price in line with the off-chain price. So that's kind of how you'll see stable pricing, even with lower liquidity or lower TVL, be a lot more, I guess, receptive, or it will change a lot quicker to the off-chain price. And that, I guess that comes down to why we're focused on non-USD stablecoins and RWAs, because those are the assets where the price discovery occurs off-chain. For other assets like cryptos and even USD stablecoins, a lot of the price discovery is occurring on-chain. And that may not always be the case for RWAs and non-USD. In 5 years, perhaps the price discovery will be on-chain.
Oh, okay, cool. Because I also understand that these currency that you've pegged to the USDC dollar is kind of like the base for base trading coins for forex traders, right? And then the others are quite, I would say, volatile, more volatile than these ones because they're traded often. And I also remember that you mentioned that you would add more like currencies to the pools if the need may be. One question when trying to add more, when these ones that are less volatile, for example, I think I know the Russian currency and some other currencies actually, and I also heard you mention the Nigerian naira and the rest. Some of these ones that are not actually in the FX market, well, the ton of them. When adding these ones, are you can also take into consideration how volatile they are, and how it should be traded, for in the FX market, especially.
Yeah.
Well, I mean, currency and the Russian ruble are trading to the tune of billions of dollars a month in the FX market. So there's definitely deeply liquid markets in those. Our plan is to add any pool that's a legitimate issuer, that we do due diligence, that they actually have one-to-one tokens and aren't a scam for some fake stable coin. And think of it this way: we will integrate to a variety of neobanks as well. I look forward to the day when somebody in Lithuania uses, say, Flashy.cash, a neobank over there. They wire in some $10,000 or whatever of euros, and then within a couple of clicks inside of their neobank account, they can buy Swiss francs, Japanese yen, New Zealand dollar, tokenized gold, maybe a bit of oil, and they'll never know it's actually routing through and utilizing Stabull.finance to execute all of that. And everything's run by oracles. Again, we've got a lot of historical relationship with Chainlink, and we've been working with them to design, our oracle solutions and satisfy our needs. And we're pretty confident that we'll just be able to add more pools and more chains and more assets and more currencies, and the price discovery will be, relatively clean and highly capital efficient, which is the key.
And just to answer the last part of your question about volatility, the stable contracts do have a number of parameters that can be changed initially by us, but eventually by governance, which would be changed based on the volatility of the pool or the stablecoin being added. If it's higher volatility, the alpha parameter may be lowered. This is about the design of the Stabull AMM. We sometimes refer to it as a hybrid curve. Unlike Uniswap or any constant product AMM, which is basically a curve where liquidity is spread out across the entirety of the prices. Stabull's liquidity is largely centered in the middle around an oracle, which produces this kind of hybrid flattened curve. So there's very low liquidity around the oracle, but as you move further away from the oracle, slippage and liquidity gets lower and lower. And so the kind of size of the low slippage flattened area of the curve is the parameter we change based on the volatility of the stablecoin.
All right. Yeah. Thank you very much for sorry. So I think you've answered the question very extensively. Well, so one last thing: the developers that are working, behind the scenes on this platform, are they here with you guys full time or kind of like have their own separate jobs? I'm asking this so when there is this change in addition to the pools, they're 24/7 active to make these changes to the UI and to the backend. Are they always available 24/7?
Yeah, they are available. Sorry, you go, Fran. Oh,
You go.
Oh, yeah. I was just going to say, yes, they are. And the parameters I mentioned are like smart contract parameters, and our smart contracts are currently owned by a multi-sig across all our smart contracts. So changes to those type of parameters that affect the pool will be made by like a governance vote and then changed based on the multi-sig. But for UI changes, yes, our developers are available 24/7.
Thank you very much. Thank you for the answers. Thank you, Rainlands, for giving me the opportunity. Appreciate you.
Thank you for the question, CC. And we're going to keep it moving to two more participants. Next up, Freddie, and then we're going to do Mazzy Mike. Freddie, hopefully you're having an awesome day so far as well. And the floor is all yours. Welcome.
Hello, Rainland. So can I go on with my question?
Of course. Welcome.
So I just want to know about your token. How many percent of the token will be locked and how many will be bought? Can you tell us on how the token is going to be split?
Sorry, it's very difficult to hear you. Could you repeat that?
Oh, I said, how many percent of the token will be locked and how many will be bonds? Can you tell us on how the token is going to be split?
Okay, so we have 20%, we have 10 million tokens, total supply. 20% can never be sold. They are called prolonged liquidity. You can only get them by adding, massive amounts of liquidity as a large partner, and even that has an expiry. So you're going to see proposals in the future where people say, hey, I have supplied $1 million of liquidity for the last 9 months. My 9 months is over. I would like, 1% of the supply for continuing to bring this liquidity for another 9 months. Because we realized, again, having worked on so many different projects over the years, that we can move the incentive away from the capital table to the revenue table, so to speak. People need to cover what's called their cost of capital. They can stick liquidity on so many different projects in DeFi, right? And so we want to incentivize power users, but without giving them tokens they could just perpetually sell forever. So that's 20% of the supply, and that's what it's there for. It's a kind of a new invention in the space, if you will, to avoid constant sell pressure. Then we have another 30% of the entire supply that is locked in a 10-plus year liquidity mining program. and that's emitted across all the different pools, and people will be able to vote on who gets how much APY per quarter, creating competition there. We have about 23% of the total tokens sold to pre-sale and public sale. That's got a 2-year vest on it, of various different unlocks on TGE. And then we have a treasury and market makers and advisors and airdrops and all that fun stuff for the balance. Our tokenomics are available on the Git book. The key is that, we have very, very simple but highly scalable infrastructure, multi-chain, RWA, stablecoin specific DEX. We're surprised nobody has built this before, right? But we also understand why, because it's not simple to make it simple. And then we have, sorry, my screen was just flickering. Sorry, I think that answers the bulk of your question. Otherwise, I'll just start ranting on about the rest of the tokenomics unless you'd like more detail there. Does that answer your question? Did I get it right?
Oh yes, thanks for that great answer. So can I ask one last question?
Go for it, Freddie, no problem.
So
The last thing I wanted to add, just had a brain fart. So we have this highly scalable project, but we wanted to make sure that it was fair. And so the market cap on day one is a tiny 3.25 million. And we'll have plenty of exchanges and listings and everything else in marketing perpetually. So I think we're going to have a nice launch. If this is a question about tokenomics, it's kind of important to understand that we're not starting off at 100 million. We're starting off very small to keep it fair for everybody involved.
Okay, man, thanks for that great answer. So I just want to know what strategies, innovations, and initiatives you have so that your project remains on time, since this crypto market is very competitive and changing.
Yeah, look, I mean, this has been a labor of love. We started the project 2 years ago, and we took a long time to decide the best technology to use, the best design for the bonding curve. We did some heavy research, and we came to the conclusion that by 2028, the market will be about $5 trillion of real-world assets on-chain, right? But backwards engineering that, how is that going to happen? Well, the industry needs to go through a wave of investment, and we have witnessed this in the last 18 months. BlackRock created I think, $1 billion BUIDL fund for RWAs and stablecoins. Ripple is announcing huge moves and large investments for stablecoins and RWAs. Hashgraph, Ton, all of them are making big partnerships and moves. There's massive projects like Plume, Plume.com, I think, or .io. They are probably the largest pipeline of real-world assets that we're talking to, in depth. These projects have received astronomical funding, but they're not live yet. They're only just coming live now. And so it's super important that we spend the last 2 years building relationships with all this, well-capitalized, serious issuers out there, so that when they do go live, they have a home for their products right away. A real-world asset focused AMM is essential if you have $1 billion worth of real-world assets in your pipeline as an issuer like Plume or others. And so as the industry matures, and again, we know pretty well who's doing what, when they're going live, when they're launching what, and as they go to the market, then we just load up a pool for them. And they bring their liquidity, and they bring their market makers, and they bring their announcements to let the world know that their product is available on Stabull.Finance.
Okay, Rainland, thanks for this great opportunity. It's really been a great AMA so far. Have a great day, man.
Yeah, thanks, Freddie.
Thank you for the questions, Freddie, and wishing the same to you. And as I did mention before, moving on to the last one, Mike, I already unmuted you, so you are on the last hot seat. You know how this goes. Better make your questions count. Better make them great ones. Floor is all yours. Welcome.
Thank you so much, Rainlands. So good to be here. Hello, Frank. Hello everyone on the call. I'm just going to keep it really quick because, we're out of time. But I wanted to start by commending you guys for, a very detailed presentation, and also, all of the information you've put out there on your website, really detailed, and, it just, collaborates what you've been saying here on the call. So I wanted to commend you guys for that. But also I wanted to...
You cut off, Mike, just so you know, so you're probably going to have to start all over again.
Looks like we lost him.
Okay. Yeah, I gave you a few seconds to see if we're going to reconnect. Okay, perfect. We can hear you now.
Oh, okay. So I'm just sorry about that. So I just said in 2023, over 600 stable tokens got depegged. And, it got me worried as to, the security of what you are offering. Is there any sort of AI technology you brought into place to predict this kind of happenings, just so that people who are, invested will not, be stuck at some point when, this movement of the market affects even stable coins? Or perhaps you have some sort of an insurance to guard for a very short period so that investors don't lose a lot of funds when this depegging or, movement in the market affects even stable coins.
Sure, that's a very interesting question. So, look, we can avoid bulk of the problems by simply avoiding algorithmic dubious stablecoins like Terra and Luna, right? I stay as far away from that because the design was very, very obvious that it will turn into disaster, and it did turn into a disaster. It was pegged to an altcoin and not by actual dollars in a bank account. So when we talk to issuers, the first question we ask is to show us the bearer trust, right? The bankruptcy remote structure that even if the business fails of the issuer, that the user's tokens don't disappear. Now, if somebody comes along and, I don't know, market sells $200 million worth of USDC, and USDC unpegs to, say, 95 cents instead of $1, that's the market. That's what the market is saying. I mean, Ryan, do you want to comment in terms of, how we're exploring adding machine learning and partnerships potentially like Gora and others for making things more capital efficient and safer over time with various partners?
Yeah, I mean, I would just say that, in response to the depegging question, because of this unique Oracle design where the price is governed by the off-chain Oracle, in some respects, Stabull can help issuers in maintaining their peg in the short term. Some of you may know that a stablecoin's peg is maintained by the, I guess, belief or trust that you can always exchange one of your stablecoin for one of your fiat currency. And that process is often achieved by market makers who maintain the price in the secondary market, like a DEX or a centralized exchange, by taking the spread, if it's depegged, with a premium or a discount, and profiting off that spread by either removing supply or creating supply with the issuer. And for smaller stable coins and non-USD stable coins that are trying to gain market share, that process can sometimes be, it can take time. There's not always a large market maker doing those trades every hour of the day. So in some respects, where Stabull centers its liquidity around an off-chain Oracle and offers a price closer to the, I guess, peg rate, that kind of less liquid pegging mechanism can be maintained on Stabull for in the short term. Obviously, in the long term, then there needs to be either supply removed or supply added for the peg to be maintained. In terms of your question about AI, Fran's mentioned our partnership soon with Hectra, which is more about the penetration testing and automatic audit of our contracts in response to not just existing but new vulnerabilities that are found in smart contracts. And also part of our roadmap is the like controls over oracles. It's not too common, but one of the main DEX vulnerabilities you see, not so much recently, but a couple of years ago, are oracle attacks, where attackers can either control or take use of like problems within Oracle in order to profit at the expense of liquidity providers. So yeah, part of our roadmap is adding some checks and controls and anomaly detection to the oracles to make sure we don't suffer from those problems as well. Just on the oracle attack, we are somewhat a lot more protected by that because our oracles are off-chain. It's a lot easier to manipulate an on-chain oracle just because the liquidity is smaller. Not sure if that answered your question.
It did actually. I'm just really, impressed with the introduction of machine learning and AI. Because why I asked about the depegging was because of what happened with Luno and USDT, and it's so good to see that Frank actually said, he had taken precautions before then, before he even started. So my question, was in terms of when you have this, so it doesn't become overwhelming to depend solely on what you know. But machine learning AI would help to bridge that gap, and I'm happy you guys have introduced that obviously. But I wanted to ask one more thing. So when I was reading, I did see that there was so much on currencies and all of that in terms of stables, and it got me thinking of innovative ways to introduce other commodities like gold and crude, and I'm glad Frank also mentioned it. So it's not as though you guys are not thinking in that line, but I wanted to find out with gold and some of these other commodities, what are the barrier and difficulties of bringing them on board early? So I see that there are future plans to introduce that, but what is the hitch with that? Is there any risks involved? What are your fears when it comes to introducing other commodities that are not currencies?
Yeah, so let's split this up between me and Ryan from a business perspective and from a technical perspective. So from a business perspective, again, a lot of these issuers have only just in the last 9 months received their funding. So for example, there's this great business called Kinesis.money. They have somewhere like $60-70 million worth of tokenized gold and silver, and they're really well designed. It's at the Freeport economic zone in Singapore in a vault. It's audited in terms of proof of reserves and everything else. But all of their liquidity is currently on Stellar. Now, we can't disclose what we know, but we know that they're moving their liquidity to more accessible chains. So as soon as it's available on an EVM chain, it becomes easier for us to load a pool up. So that's the business direction, right? As soon as they're ready on a chain that is popular and we have already integrated it, we can create a pool right away. Otherwise, we need to wait until we integrate the chain, which is a tri-party kind of arrangement between a grant with, say, Stellar, and then the issuer themselves, and possibly even a market maker on top of that. So, yeah, we will literally load up any tokenized gold, silver, oil, whatever commodity as soon as a professional team that's got a bankruptcy remote structure and non-fractional reserve practices makes their asset available on a chain that people already use. From a technical perspective, how do we price commodities and source the price discovery? I'll hand that over to Ryan for things like gold and oil, etc.
I mean, much the same for the current suite of non-USD stablecoins. We have Oracle providers, and they provide us an Oracle price for RWAs, the same as non-USD stablecoins. In terms of how they do it, for example, one of ours is Chainlink. They're probably the most well-known Oracle provider. In their kind of infrastructure, they have a number of node providers that are listening to basically real-world FX market or commodity APIs for different prices, whether that be on exchange or over the counter, and they're reporting those prices through the Oracle, and that gets brought on-chain by Chainlink. So, I mean, that is, I guess, a limiting factor by which tokens and RWAs we can list, is that we require an Oracle. But with the number of Oracle providers and assuming that is a popular like market or RWA, then there's always an incentive for those node operators to offer that Oracle. Just to add to what Fran said, I guess one of the other limits is the kind of fragmented liquidity, or we talk to a lot of RWA issuers that are on one chain or another chain, and part of our roadmap will be, and I guess a bigger part of our brand will be multi-chain swaps. Our token will be available on CCIP, which is Chainlink's interoperability layer, as a way to bridge the token between Ethereum and Polygon, and we hope to bring CCIP into become a bigger part of our infrastructure to enable you to swap NZDS for tokenized gold on another chain in like a user-friendly portal like Stabull.
Rainland, back to you.
All right. Thank you so much for the answers. Thank you so much, Ryan, for the opportunity as well.
Great questions. Thank you, Mike.
Thank you very much, Mike. Yeah, I was waiting if Mike has any feedback here. Yeah, but that would be it for today. So just wanted to say, Fran, Ryan, you two have been absolutely amazing. Appreciate you stopping by. Thank you for all the information. Thank you for answering not only all of my questions, but also the community questions here. And before we conclude everything, just wanted to say once again, considering we still have it as the last pin message, announcement is forwarded. I know that I said this probably 5 or 6 times today, but did want to say if anyone is interested in contributing, you have the link there. So if you want to visit the pre-sale, you can do so without the problem. And of course, for any additional questions, do make sure to join your Discord, and we're going to catch you on the next one. Fran, Ryan, Pepe, Elon as well, and of course the rest of the Stabull team wanted to wish you guys the best of luck. And yeah, we're going to talk soon. Thank you very much, and have a good rest of the day.
Thanks for hosting us. Fantastic. Thanks so much.
Cheers, Rainland.
Cheers. Thank you very much. We're going to catch you on the next one. Cheers.